Good afternoon, guys. We've got everybody joining us at this moment. We've opened up the waiting room, and I believe everybody be
I
on
think
mute.
Michael's on mute.
Michael's on mute, so we have to figure out how to get Michael off mute. Let's see if we can find you, Michael. Give me a second here. There we go. Oh, did I get you? I might have got somebody else by accident. The screen's flipping through as people are joining in here. It's like playing a video game.
There we go. Excellent.
All right. If I am muted, somebody else, please mute yourselves. It's a little challenging there. All right. Welcome, everybody, to our AGM and Red Trust update. We've anticipating lots of questions at the end, as always. I think we've all become pretty accustomed to the format, and we are going to move fairly quickly through the format as usual. There'll be a little bit of time that we spend on the AGM aspect, but we've got John and Michael here, your three GP partners. Michael, you've got some offsite work to do today, so we'll just get things rolling. I think we've got everybody coming in now pretty well. All right, so as I said, we're going to just walk through the normal slides that we always do for everybody to be here. If you're not able to join this and you're listening to this on a recording, hopefully there'll be enough information in this that you'll be able to get that. But whether you're listening to this later or you're into this live right now, you will get a copy of this in your email following this presentation. The video will be circulated as well as the PDF of it will be uploaded to the portal. So you can reference that. We will not spend a lot of time on some of the finer points. We would like to spend most of our time on answering questions at the end. So as I go through here, I'll ask Michael or John if you have any opening comments.
Yeah, thanks, Doug. Hi, everyone. Welcome. Our annual general meeting. We've gotten great feedback from all of you that these quarterly and periodic video updates are helpful, so we're continuing to do them. Let us know what works and what doesn't so that we can communicate to all of you in the right way so that you have the right information that you need. I want to thank Doug and John. You guys have been great to work with. You know, we're getting through one of the most difficult economies in the last 20 years, probably the most difficult one I've ever seen. And we're working hard to get through it together, and we're doing a great job. So well done, guys. And Mary and Scott for keeping everything, and all the rest of the team, and all of the investors, all of you that have joined. And just we're all doing it together. We're all working hard, which is excellent. I might have some more comments when we look into some of the market data, but I wanted to just open to welcome everyone and thank them for being here. Thank all of you for being here.
Thanks, Michael. As always, again, we emphasize our approach is pretty straightforward. We were seeking to find properties that we could invest in, put equity into, and that we can protect that capital along the way, doing all the due diligence necessary and to be aggressive about it. And I believe we did that. And now it's the exit strategies, and that's 99% of everything that we do right now is seeking ways to be able to sell these properties, move these properties. And when we go through the property updates in the individual property, you'll see we do as little as possible to make sure we keep them moving forward, but we'll do every aspect of that's necessary to make sure it keeps adding value to it in the eyes of a potential buyer builder there. So nothing has changed as far as the partnerships and the independent trustees with Chris Wickens and Darren Benamy and myself as the operating trustee, and then our general partners that we've already introduced. Nothing has changed there. At this point, we will cover off the Red Trust financials, which are the audited year ends and the year-to-date cash flow statements. And again, we are not going to go into fine details. I'm going to show them on the screen. We're going to go through the formality of opening up an AGM meeting and closing it for the purposes of our records and for compliance. If you want to get into greater detail on any of the aspects of the financials, you're certainly welcome to ask a question at the end or to direct a question via email into Mary, and then we will find out who the most appropriate person is to answer that question so we can deal with more specific questions on a one-on-one basis. So as we've noted, we did our audit. BDO Canada is our auditor. They've already been circulated. We've already done the approval process, and it's already been signed off by the trustees. This is a formality of opening up a annual general meeting, which we call to order right now at 12:05. And then we approve our auditors, we approve our trustees, and we approve the consolidated year-end 2024 financial statements. Again, there's no voting by our unit holders. You're here as the audience. The trustees actually vote on your behalf. So we'll walk through the financials, and then that'll adjourn the meeting. There'll be another slide to do so. So again, year-end December 31st, 2024, in consultation with BDO.
Sorry, Doug, I don't want to just interrupt. Are you sharing the deck?
Oh, is it not on the screen?
I'm not seeing it. I don't know if anyone else is seeing it.
My apologies. Let's see what's happening here. Screen two.
While Doug's figuring it out, Richard, can you turn your video off?
Yeah, it's on now.
Okay, sorry about that, guys. I didn't realize that. I'll just go back to the beginning here. I'm not going to spend time on it. You've already heard the verbal side of it. So there's our intro deck. Our general partners hasn't changed, as I said. Our approach, which we've always stuck to, our independent trustees and trustees on the screen, and then our year-to-date financials. This is the screen I was at actually here, where I was stating that our meeting has now opened at 12:05. The approval of the trustees, the auditors, and the consolidated financials, which we're going to review at this point. Again, BDO is our auditor, and they obviously go through their process. It's a good point here too, when we're talking about financials, is it's an expensive process to be audited, and it's a compliance requirement. And we do everything possible to push back on BDO to do, a good job but at a fair price, and to make sure we try to kind of control those costs by having our books and records in order for them. So again, we've already, as trustees, reviewed the financials and signed off. In general, our position is only changed from prior because of the sale of the Picton property. So when we sold the Picton property, the amount of equity on the books is lowered, and you'll see these numbers reflect in there. So about $11 million still outstanding on what we believe to be property values of close to $20 million. There's the annual reports that are in here, again, for your review later. And then each of the projects is highlighted here. The only thing with the projects that we feel is really important to point out, and I alluded to it with the BDO comments, is we do, we push back on any vendor, anybody, to keep our costs down. And we only pay out administrative costs. There's no other, fees or any costs that we're putting out unless it's absolutely necessary or it's adding accretive value to the property. So in the case of Wellington, there's very little activity as far as costs attribution for Wellington. We just keep moving the process forward, seeking that full approval for full servicing in conjunction with the work they're doing. And John will cover off that, shortly. So we don't leave a lot of cash reserve here, and we don't have a lot of cash going out on that one. With regards to the property in Cambridge, there is a bit of work going on there right now. We do spend a little bit of money in engineering. We're doing some clearing. John will talk about that, and some remediation of a small area that was once a rail line, and they wanted to remediate it. I think the total cost on that's about $180,000 to do the whole job. So there's a little bit of cost, and there's a little bit of money to go out for keeping that property value at the peak value and most attractive to any builder who's looking to acquire the property. And we hold a bit of a reserve there. You'll see in the GIC investment to make sure we have the cash on hand for that. The last property, of course, Port Colborne, there is some activity happening there. We do have a large reserve in this. We pointed out this over the past number of presentations, that we were in a position where we thought we may have to do some remediation of soil. So we definitely held on to a cash reserve. And also, obviously, this kind of prolonged stagnation in the market is also telling us we made the right decision to hold on to the cash and not do the work unless necessary. And again, John will cover off some of those points. But it does require us to spend some money. In addition, in Port Colborne, we have a small amount of land that we have to acquire from the municipality, which is costing us, and John, you can remind me, it's costing us, I think, $150,000.
It was 100,000.
Oh, 100,000 plus,
Yeah.
okay, so I think you're around $100,000, so we have to acquire it. And I know the bill is coming in soon, but we basically, again, on your behalf, we just keep pushing that off until the last moment because we want to hold on to our cash and get our, what is now, 2 or 3% interest rate on our cash reserve. But we do have to do that. That'll happen in the next, I think, next 60 days. I don't think we can push the municipality off much further. So once again, all of these are in here for your review. You can certainly ask any questions in the Q&A. Put it into the chat, and then we'll try and come back if necessary to these slides. But you can get your access to these when you get the recorded video and the PDF that will be uploaded to the portal. So that concludes the AGM portion. So the meeting is now over at 12:11. And once again, if there's anything in this presentation or anything that you believe that is relevant to the audit and you want more details, please send an email into Mary. You can certainly ask in the chat today. So thank you for your patience for that. Now, we know our current portfolio. I'm not going to spend a lot of time on that. You know the properties, and you know that we sold off Picton, which we've referenced several times. You've seen this Gantt chart many times on our progress, and quite frankly, as we've discussed as a GP group, at this point, the 3 properties that are still on our books are all for sale. We've got various teams working on this, and the one that sold is sold. So we don't need to really update this anymore. All of our targets are sitting idle until we can see this market move forward and we can find a buyer for these properties. And we are currently engaged with 2 different brokerage houses, and this is done purposely again so that we have 2 different approaches in 2 different markets, and we're not just giving all of the listings to one team. So a little bit of friendly competition. We're working with Royal LePage out of Toronto, and then we're working with Cushman Wakefield out of the Waterloo region. Cushman Wakefield is specifically embedded in Waterloo over to the Niagara area. That's their kind of area of specialty. And Royal LePage has the clear strengths in the Toronto and east of Toronto, as well as in London. They do overlap 100%, and we like that. So we're happy to talk about our strategy and our partners. But at this point, all 3 properties have feelers out in the market. Cambridge will be listed on MLS, and so will Port Colborne, I believe, as of this week or next week, they'll go on MLS.
Yeah, I found out today, Doug, they'll be listed by end of day today.
Oh, end of day today, okay.
Yeah, because it's been on the market, well, not on the market, but it has been exclusively listed. So they send it to 2,000 different brokers across southwestern, southeastern Ontario. And because they've had some feedback in the sales, but we've not had an offer, so they decided that our best foot forward would be to put it on the MLS, and that will capture more builders and maybe more interest.
And when we selected this team on behalf of ourselves and investors, we interviewed a number of different potential brokerages and realtors, and we had them all create a presentation for us. They all gave us a presentation, and we chose the best out of everybody that gave us the presentations. And so we really took a intentional approach to finding the right who's that will get us the right price for these properties.
Again, I'm just opened up the chat while you 2 were speaking there. There's a few questions coming up, so we'll get those. Some of these things will get covered in there. And again, we can come back to the screen if we need to focus on the actual companies and those relationships. So I'm going to just hand over to John to give us the what's happening with our current properties as far as physical stuff happening on the site and some of the planning.
Like Doug mentioned earlier, all the sites have rezoned and site plan approved, except for Wellington, which is just because there's a holding pattern for servicing capacity. The plan was to have capacity by this year. It's been delayed due to 50% of the council voted against it. So now we are pushing forward with a group of other land developers trying to get the capacity pushed forward again. So that's holding us up. We do have some engineering submissions which will be made by end of this month, but that is not holding any sale of this property. So we are
Just a comment there, John. I think just for clarity, the council didn't vote against our project. They just voted against increasing the servicing capacity of Prince Edward County in general. Basically, why would we increase our servicing if no one's going to build, when all of us landowners and builders are saying, well, if you can't increase your capacity, then nobody can build. And that's where we're kind of stuck there. We are pretty high on the queue, though.
Yeah.
We're right there. So
the issue was the city promised that we would have it by 2025.
Yeah, exactly.
So, and it's very difficult working with the city. As far as Cambridge goes, there's been a few updates on Cambridge. I think since our last meeting, we had to do some remediation, as Doug mentioned, on the railway line. So we had to remove 35 trees. We had to get a permit for that. The trees are removed, and we had to put a fencing around the remaining trees to protect them. And the remediation was completed last week. So the site is totally clean. We don't have to do a risk assessment. So we will be submitting for an RSC in the next 30 to 60 days once we have all the reports completed.
And we talked about that as a group too, and we strategically decided to go forward with the remediation to make this site more attractive to a potential builder. Because one of our value propositions as a trust and as a group is that we can get builders shoveling ground much faster than if they were to do all of this on their own. That's the value we're bringing. So we did decide as a general partnership that it would look more attractive if we spent the money to remediate the trees as opposed to leave that for the next person. It had to be done either way. So
it's just one more step.
That was a strategic move on our part to continue to make the site more attractive to a potential builder.
And that leaves Port Colborne?
Yeah, Port Colborne. So like Doug mentioned as well, we had to buy a portion of the city land to add in more density for us. And so we can put a stormwater pond there. We've done some remediation on the site already. The risk assessment was, all the reports were completed and submitted to the ministry on the March 21st. They acknowledged it March 28th, and we should have some feedback this week or next week from the ministry. It's a process that we have to go through with a risk assessment. Hopefully it'll be one comment, then another submission, and then that'll be it. But you never know with the ministry. And also we had a section of the site which was, I would designate it as an archaeology site. So we've sent letters and reports to the First Nations. They've received it and they've replied to us, and now we're just sending feedback. That portion of the site does not affect us because we've already separated it and put a fence around it already, and that will be left alone. But it does not devalue the site. It does not shrink our site at all.
Yeah, I know we've kind of discussed most of those points previously. I think the thing that I keep bringing back to our unitholders is that we hold off on these things as much as possible because as proven with Picton, builders will come in and buy and finish the process when they feel they want to take over. So you don't want to always go too quickly and start spending money on stuff that the builder would actually have to do themselves anyway and purchase it. And I think we've done a good job with that. Whereas now that we've seen what's going on in our geopolitical world and the craziness that's happening, any little bit of added value that we can do to the property, it hopefully keeps us in the running when the builders come back to the table and stop kicking tires and start putting offers on the table. So we're the most attractive, property on the block, so to speak. So that's the properties. I don't know, Michael, any comments about the marketplace right now, and we can move into Q&A for people kind of hit some of those chats.
Yeah, yeah, I do. And I think it probably addresses maybe some of the chats here. What I'll mention is, I always like to look at what are the key risks in any situation, when whether you're doing an investment or any sort of situation you're in. And so always keeping an eye on any risks is really important for us as a general partnership. And really the risk right now that we're experiencing with the uh, the red trust is similar to the risk across the marketplace. It's just time. Things are just taking longer than they have always taken. And I'll tell you why in a moment, why things are taking longer. But the great news is the way that we've set this up, and this is what gives me confidence and should give everybody confidence, is the way that we've set things up is we have provided the maximum amount of time proofing. I'm going to use that word. I'm just going to use that word, time proofing or time mitigation. We provided the maximum amount because we don't have a debt service that we have to pay every single month. And that's where raw land or development gets a little tricky, is when you have a massive debt service. We are, as a group, we paid cash for our properties. So other than maintaining some property taxes and things like that, which we've accounted for as a general partnership in the original accounting, all of that is covered. And we're just going against the clock, but we're not going against the clock as if had a debt structure where we had to make a monthly payment every single month. And so I tell you that because when we did the numbers at our last, I don't know if we did our last webinar, but when we do the numbers internally, there's still, even if we dropped our price, the properties, we haven't lost money, right? And so that's really the key, is we're not having to pay every single month. So the risk for us is time. And every month that goes on, the way it works is the return gets a little bit lower. We don't lose money every month, which would be other structures, but our risk slowly goes, our return goes down a little bit, a little bit, a little bit every time. So there's still equity and there's still value in the projects. Well, why are things taking long? I'll just go over a couple things that I was thinking about this morning. Why are things taking so long? Well, builders are not building, so they're not buying our product as land offers. Our product is to provide ready to go land. And if they're not building, then they don't need our raw material at this point. And so there's four real reasons why they're not building. And so this is the risks that we're watching. Is number one, builders are waiting to hear what the new government is going to do. So are there any new government policy changes that are going to come through? Are they going to be good? Are they going to be bad? And so builders are like, let's see what happens with this new government. I think a lot of builders who are business people were expecting a conservative government to win in Canada, and that did not happen. We went into a liberal government. Um, so I think that they're not as gung ho as they would have been as if a conservative government would have come in, and so that's creating more pause. Um, and so they want to see what this new liberal government's going to do for businesses, if they're going to stop businesses from growing, if they're going to increase taxes, or if they're going to really support housing. And so that's pause number one. That's what's causing builders. One of the things causing them to pause. Number two is the with the tariffs and what's happening in the US, builders are super uncertain with their building costs. So it's like, will the cost of steel go up? Will the cost of all of these things that we import go up? We don't really know. It still has to stabilize and settle in terms of the Trump tariff Canada war sort of situation. So those two uncertainties are causing builders to say, let's just wait and see how the dust settles. And so that's why things are taking a little bit longer. The third one is that buyer transaction is low in the marketplace, and anyone who's selling their home, even if the home you live in, the buyer transaction is low. When buyer transaction is low, people can't sell their homes, which means they can't buy new homes. So that entire velocity of transactions is the lowest it's ever been. So builders are saying, well, even if we're certain about the policies and there was no increase in prices that were uncertain, we still are uncertain if people are going to buy our units because they're not selling their old homes. And then the fourth thing I'll say is the buyer's ability to qualify in the future when the projects are complete, whether it's a home or a condo, whatever. You buy today pre-construction. That's how the builder will sell, and then the buyer will have to close at some point in the future. Well, that's becoming very difficult because of the stress tests. Because even though the interest rates might only be 4 or 5%, buyers have to qualify at 2% higher, 6 or 7%, which means to buy an $800,000 home, you need to make $250,000 a year. And so builders are saying, well, we don't want to take on that risk right now. Let's see if the government's going to reverse some of these things that are, in my opinion, that are really hurting people's ability to buy homes. And if this new government is going to change that, that's going to be one of the things that's going to build confidence. And so those are the four things. And when I really thought about what is holding up builders, it's uncertainty on government policy they're waiting to hear, uncertainty on what's happening with the tariffs and building costs. It's transactions of single family homes have to increase a little bit, just a little bit, but they have to increase. And the government has to change this rule of buyers not being able to qualify because it's 2% higher, or at least soften it. Once one or two or a combination of those four things happening, we're going to see things to start to move. And those are the things that we're watching, completely out of our control as human beings, as investors, but we have to be aware of these things. And that's my piece there that I wanted to say. I think that may have answered some questions and maybe have
I think
created some more.
definitely that touches on the I think the one question here about where we got specifically the Carney getting to building houses and developments. I think what's really necessary in our public atmosphere right now, and that includes our unit holders ourselves, is we have to send a message to all levels of government, municipalities, provincial and federal, that the only way they're going to solve this problem is by making sure that the projects and the builders, land like ours, that's all ready to go, builders that are ready to go, those are the ones who get the direct relief and the direct help. Like creating less friction for other developments to move forward doesn't really help us, of course, that's selfish on our part, but it doesn't really solve the problem. So we want to see as much of their resources put towards putting houses onto the sites like ours that are ready to be built so that builders are confident to go forward. So my personal opinion is I don't see the federal government looking at a solution and saying, yeah, we'll get into building them ourselves. What I see is a lot of negotiation and maybe Carney experience, I'm hoping, that they realize that having existing partners who have experience, who already have land and are builders who already have success, are the ones that they're going to go to and say, hey, okay, you know what, we'll give you the assistance, we'll give you the help, we'll give you the tax relief on development charges or HST, or we'll give you some low interest loans to get the equity so we can buy these, entitled lands. We'll give you all that, but here's the rules you're going to have to build with under to kind of maintain prices. And I don't know if that's the entire right solution. That's just my personal opinion. But I do know that unless we have the general population lobbying to make sure that all levels of government are taking care of the ones who have already invested, yourselves, ourselves, people who are already real estate investors supporting real estate in Canada, in Ontario, make sure they figure out how to get us. Because if they get us and get us out and get us moving, we're just going to invest in more real estate. So it's a win-win for them. So I'm hoping to see that, but again, that's my personal hope. And I don't know what the government's announcements are going to be in the next couple of weeks.
No, but there is a question about timing on sale, and it's very difficult from our side to give a date. End of the day, we need the tariff war to end, which I believe, it's already ending with the Far East and Europe. Once that's settled, then we do believe that the interest rates will start dropping again, and that will improve affordability. And if that happens, then hopefully people start buying again, and builders will build, and our sites will be ready, primed, ready for them to build on.
Yeah, I think there's two additional. Oh, sorry, Michael.
I just want to put a kind of a timing, maybe some framework around Dan's question of timing of sale. When we were getting the analysis from the realtors, they said a product like this would be around the 6-month mark. So around a 6-month mark, 6 to 9 months for a sale, and then maybe another 3 months of conditional period. So that's kind of where we're at, is like a 6 to 12 month sale. And then the tariffs hit, and then our government changed. So that basically paused right in the middle of that 6-month period. So once we unpause from the 4 things I talked about and what John said, then we're looking at a 6-month timing. So if I can give you an answer, Dan, it would be We've been told by the experts this is about 6 months once the market resumes, would be what we would say for timing of the sale.
Yeah, and I would agree with that. And there's just another point there was brought up about our verbal offer, and I wanted to share a couple things on that. One, yes, that verbal offer that we had in Port Colborne does still exist, and it's something we didn't cover in detail because it's within the hands of our sales teams that we've hired, our brokerage houses. When we do get the reports, we do see the reports. We still see the interest that is shown. What we've learned, and I think everybody already kind of can guess, is the number of tire kickers has doubled in the marketplace over the last 6 months to 8 months. And the ones who were looking and talking about our sites, and we have people who are interested in Cambridge and Port Colborne, so they tell us. But the problem, of course, is that everybody else went on hiatus when all of this was happening, as Michael's pointed out and John's pointed out. So everybody turned into tire kickers, and they're all like, no one of us want to take the next step forward. So I give kudos to our sales guys. We see their tenacity of their follow-ups, and then the dozens and dozens and sometimes hundreds of conversations over time that they've had, and the short list. And the short list for Cambridge is 2 or 3 groups that are serious about looking at it when the time is right for them, which could mean when interest rates or announcements or other programs are incentivized for them. And then Port Colborne, we still have 2 groups that were interested in Port Colborne. None of that means anything to us or yourselves until we see an offer on the table, which is the exact words that we give back to our sales guys every time they give us a report. That's great, thank you, but tell these groups, make an offer. The last comment I'll make, and I think it's an important one, is we never want to fire sale a property. And this kind of addresses some of the questions about do we have the cash on hand, and if you were able to follow my quick jump through the financials, we do have cash on hand, so we can cover our costs and hold on for a year or 2 years if necessary, and do minimal work to the properties. Again, aside from things that we have to do for applications or engineering that has to be done because they're mandating it to us. But we could survive this for another 2 years if we had to. The factor, of course, is if the prices continue to be suppressed and we wait 2 years, then our rate of return goes down. But if we fire sale today, we're guaranteeing our rate of return going down, and also it shows that weakness in our own portfolio, which then maybe makes us susceptible to other fire sale offers on our other properties. I don't think it's the right thing to do right now to fire sale. I'd say that if you were trying to sell a house into the market as well as a property, I think that's a dangerous thing to do right now. It's premature, but we're acutely aware that we don't want to be having conversations a year from now about this. We want to be talking to you in 6 months about the offers that we've finally been able to accept or at least consider. Any other questions, guys, that you see in there?
Oh, there's one about, is it an option to sell off the site single units or split up? Not really, because we're draft plan subdivision. So to do that, you have to go through another step, which we can do. But finding that amount of buyers and splitting the site up may be more difficult for a potential one buyer coming in buying the whole site.
Yeah.
And depending on where it is, it does happen in places like London where some sites are split off between 3 or 4 different builders, but our sites, and we don't have 1,000 or 1,500 units on them. They run about 230. It's perfect for a small medium builder that want to build over 2 to 3 years. And we are in communication with a lot of the builders all the time, and their feedback is the same. They don't have land for the next year or the following years, but they're not willing to buy now and hold because they don't know when the market's going to turn. But when it does, the builders need to come back and buy again.
And Aline, I'll say too that the municipalities usually don't like that, because what happens is you might sell two blocks and they get built, but then the other 2 might not get built for 10 years. You see this happen sometimes in the States where you'll have neighborhoods with like 10 houses in a row and all these little blank lots because it wasn't managed properly. They like when a builder comes in and they know that they're going to build the entire thing. It's one site plan, it's one approval, one permit, one deposit. So it's not a practical solution, even if it were a good economic solution. It becomes really tricky to do that practically. Yeah. There's Doug, were you gonna comment on that as well?
Just yeah, it's the same comments. Like we have other sites where you have different buildings where you have maybe a high-rise building pad on a corner, and you can split that off and do phase one and phase two. We did talk about doing phase one and phase two with Cambridge, or sorry, pardon me, with Port Colborne when we first started the project about splitting it. But then once the designs hit and the efficiencies and the engineering came, the stacked units in the towns as a combination all the way through that property made the most sense. And to John's point, when you're sitting with between 200 and 300 units, it's a nice ballpark area. It's just not as attractive to have 100 units. And then, again, things pivot and things change. I think we're in the right place. I think our stacked townhouse models that we have in pretty much all of the properties that we are involved in right now is what people can afford and they need. We just need to get the programs that allow them to get off the ground. There's a question here at the end about the purpose-built rental opportunity for Cambridge. And yes, to reiterate, those people who are interested that are contacted our sales team are both looking at it as a purpose-built rental. The programs are there. There is ability to build rental buildings in the marketplace right now. I'm not the expert in that field by any stretch, but I feel like any of the construction that's happening with the purpose-built rentals are ones that were from 2 and 3 years ago. And there was a bit of a pause because it's even though there's some funding available, rents were starting to slip a little bit. So certainly think that the offers the interest that's being shown in Cambridge, they've got a key eye on it. And, if they make an offer, that'll tell us whether or not they want to try and push our price down or whether those programs are going to, start to make their numbers look attractive enough so they'll match our price or property.
Doug, what about cash? Me asks, is there enough cash to carry the properties? Because we still have to pay property taxes and all of those things. How does that work?
I had made a comment a bit ago about we do have those cash reserves. They were in our financials. There's no cash reserve in Wellington. If we need cash in Wellington, we take it from one of the two projects. We have a large cash reserve in Port Colborne because of the remediation that we're aware of that would potentially need to be done to make a deal work. So we do hold on to that. And then we have a cash reserve in Cambridge, a couple $100,000. So in all cases, we don't anticipate spending all of our cash reserve at all over the next year or 2 years. We would prefer to spend very little, pay the bills, keep the lights on, so to speak, make sure we pay whatever we need to pay, but spend no more. And then we don't want to give up that cash. We don't want to return it. Just in case we are in a position where an offer for a property is contingent on us doing remediation or contingent on us taking one more step in order to make the deal work. So yes, we're in a good position. I don't like saying it. I don't like saying that we're in a good position for 2 to 3 years of reserve because that's not what we want. We want to be out of these properties yesterday. So that's our objective, is to get them sold.
Great. I think that's all of them.
So the last question there is the new question. There's a couple at the end here. Servicing costs for Wellington approved by the feds. Yeah, the town there. I don't live there, but I do have lots of familiarity with small municipalities. And what we're seeing in that municipality, I think, are a lot of new elected officials who are not necessarily wanting to commit their municipality to spending millions of dollars. So they're, I think, playing a game of chicken with everybody, the government, us, the landowners, the developers, the builders, of who's going to go first. If they're going to make the investment, which is in the $200 to $100 million range to get the servicing, that would allow capacity with all the potential sites in Prince Edward County, then it's a big chunk for them to sign off on as a local municipality. So this $18.3 million absolutely went straight in, and it's definitely moving things forward. And there'll be pressure from both levels of government, provincial and federal, on Prince Edward County to get this servicing done, because they didn't give them the $18.3 million to sit there and vote things down. So I'm assuming that'll be pressure on them. And as John mentioned, there is a group of landowners, including ourselves, who are actively lobbying together to keep that municipality educated on the benefits of getting these shovels in the ground. So, question around 5-year investment. I think we've kind of touched on this. I guess more specifically, at the prices we have today, at the prices that we believe the value of the properties, again, from what our sales teams presented to us and said, here's the value of your property based on the metrics that they had. We are well into the profit margin range. Now, whether or not we're going to be able to produce a 10, 12, or 4% profit in the end based on the duration of how long we're going to have to hold the properties, I can't guarantee that. But we have a long ways to go before we're in any kind of risk of losing any capital. We did very well with our Picton property, which added, of course, to the overall weighted average. When we do that calculation on exit, it'll definitely keep things, very looking very good. Right now, it's hard to see, and I appreciate that. And it's tough to see something, and it's very tough for us to give you an exact number. When we're doing modeling and we look at pushing this out another year, our returns on the whole portfolio are still in that 10-12% range, and that's, I think, being fairly conservative with our prices on our sale price. So we'll see. If we have to drop those sale prices, it'll drop our return. If we have to wait another year, it'll drop our return a little bit as well, but not into the area where we're not going to return 100% of capital.
There's one last one about getting an offer before the September 24th. It's very difficult to predict, and we are hoping that we'll get an offer in the next 30 to 60 days, and that's what we're pushing for. And we have weekly meetings with the brokers, so making sure that we're a priority for them as well.
Yeah, I guess that's the thing is our broker teams, whether it's the two that we've engaged currently or the other, I would say half dozen that we all speak to individually, everybody is scrambling right now, and every broker has a list of properties and buyers and trying to match up. They're just waiting to see if these the government programs and some stability in the marketplace. So yeah, I agree with John. I mean, for us to guarantee anything or even try and project that we'll have the offers, I mean, we certainly hope so. I hope to be emailing everybody in the next 2 months saying, hey, we've got offers on all the properties.
I think that's a good answer to Tara's question is, when will we get updates? Between now and September, we'll update you if there's anything to update on. I don't think you guys want to join here and just to chat, although you might want to. But like Doug said, if we get an offer or something significant happens, that'll be an email that will go out. And then we'll do our same video there in September. What is it, September 24th?
24th, yeah. 24th, yeah.
We'll do another video like this to give any sort of color commentary. But yeah, Doug will make sure that you get updates if there's any.
Yeah, absolutely.
Yeah.
I'll end it off there. We are hitting our time here, and I think we've got through the questions.
There's one more, Doug, about end of term of the trust.
Yeah. So that question again, that's exactly where we're at with our. I'm trying to figure out when an offer could come in or when we can close. I think John maybe mentioned it when you do, or maybe it was Michael, pardon me. When you do get an offer in hand, they're going to generally want 3 to 6 months of due diligence, and that's generally legitimately for due diligence, but also it's for them to buy some time to pull their financing and pull their programs together, and then they're going to want a 3-month close. So if we had an offer today, we would push very hard to close within this tax year in 2025 because we'd want one property now, and if we had a second offer on another property, we may want to be a little bit lenient and close in January for tax planning, so we split those 2 years. But at this point, we want everything to be sold as soon as we have the offers in hand. If we had 3 offers in hand today, we would work as hard as we can to close all 3 properties, try and do a little bit of tax planning with the year end, but really, as quickly as possible. So at this point, to be realistic, for all 3 properties to be closed out, the trust will be alive into 2026. There will definitely be a tax year requirement for audits and distributions and whatnot that'll go into 2026 because of the time of year we're in now. So. All righty, we're gonna wrap up right here, guys. Thank you so much. With regards to that last comment about the dates are on the screen there for our next webinar, September 24th, December 10th, and May 13th. Those are just the fixed date webinars. And I will again remind everybody that if there's a question, you can email that into Mary. Mary will find out which one of us can answer the best and get back to you, or have us contact you directly. And secondly, as everybody has stated, if we have an offer and it's serious, you guys will be the first to know. And if we need a webinar that's called in the middle of the summer, we will call a webinar if there's a need for all the unit holders to be informed. And hope that we are giving good news to everybody. So thanks, guys. Thank you for my GP partners. Thanks for joining, and everybody take care.
Okay, bye.